Hey, this is Ali from FX Order Flow channel, and in this video I'm going to explain what is value area and how we can make trades based on that. This works for all instruments and it's not just for S&P 500, but in this video I'm using S&P 500. Obviously it's impossible to just explain how to make trades with value area in just one YouTube video, but I'm going to record more videos later and upload them in the channel, so make sure to subscribe to the channel so you won't miss out the videos. So if you're following my channel, you know that I'm using level 2 data, and it's much more accurate than CFD data, and it's really different, and traders who use that, they are really in a big advantage comparing to level 1 users data. So you know that in level 2 data we can know that exactly in each and single tick of price how much volume is getting executed, either sells or buys. So it's much more powerful than level 1 data. Let me explain it on CFD first because it's simpler and you might not be familiar with level 2 data and volume profile, so it's a little bit confusing at first. It looks like that. So explaining this on a futures chart and volume profile would be confusing at first, so I'm gonna explain that on a naked chart first. So if you see differences here, this is 1 hour on S&P 500, this is also 1 hour on S&P 500, but the market, futures market, is closed today. It's Saturday, so that's why you don't see the continuing candles here. I cannot connect to NinjaTrader, so that's why there's a difference here. So this is Thursday. The day begins here and ends here. These are 1 hour candles, and on Thursday the market closed a few hours sooner because we had a bank holiday on Friday. Okay, so let's draw a box first from here to here. Okay, so do you see this area, the green area here? 68% of the Thursday volume from the beginning to the end was getting executed in this exact box, this area, the green area. So we know that based on level 2 data, 68% of the entire day of Thursday was executed in this area. This area is called value area, and it's for Thursday, so it's a daily value area. You can put that box for a week, for a month, even for a 1 hour candle. So for example, for this 1 hour candle, it would be something like that. Between these two lines, 68% of the entire candle that was executed in this 1 hour candle is in this between two lines. So it's not like that you can just, it's not like that you say that, okay, value area is only for a daily candle or the volumes that is getting executed in an entire day. No, it's not like that. If it's like that, we call it daily value area. Okay, so I try to explain as simple as I can and not make it complicated. And yeah, I'm not trying to enter the formulas on how it's getting calculated because you don't need that, and the video will be too long, so I'm just trying to make it simple for you guys. So if we put a line on the top of this, let me change the color because it's also green, and put one line on the edge down here, lowest price. I'm gonna put this card like that. So this line, which is the highest price of this area, it's called value area high. It means that it's almost the highest edge of the price of value area. And this line on the lowest edge, lowest price on this area, green area here, is called value area low. So now you might think, okay, now I can clean that, so we can just imagine that area between these two lines. Now you might think that, okay, what is it good for? Now that we know that 68% of volume is getting executed here, what is it good for? I'm gonna make a simpler example for you guys so you can understand. Let's just say that the trend is bullish and we have something like that. This is our entire day. It doesn't matter the time frame, and the market just closed like this. Okay, so how we can use that, this value area, how we can use that. So let's just say the value area for this day is something like this. Let me change this color to orange. So the orange one, let me put it a little bit lower. So the orange one is value area high, and this one, the blue one here, is value area low. So 68% of the entire day volume was getting executed here. Okay, and it's most likely buys. There are ways to know that it's either buy or sell, but I'm not going to talk about it in this video. So we had buyers in the market, and like almost the majority of their volume, which is like almost 70%, is getting executed in this area of the chart. It means that these prices and also these candles has the 68% of the entire day volume. So why does it matter? So imagine that you're seeing the chart and you know that the majority of institutional traders, institutions, hedge funds, they open most of their positions in this area. So if the market comes back to this area, there's a high chance that they will defend their positions, because not every single orders here are closed when the market is closed. Okay, so they have open orders, and there's a high chance that their open orders are in this area. So when the market comes to this edge, there's a high chance that we reject from this area and make a new high if the trend is bullish and clean. Obviously not every day is going to be clean like that, and that's why I said I can't explain it in just one video. This is the simplest and cleanest version that you can see based on value area. So the edges are really important. Also, we can make something like this. It's not like that every time we will be hitting value area highs. Sometimes we make a deeper connections. For example, sometimes a news comes out, it makes the market, it doesn't like reverse the trend to bearish, but it makes the market to have a deeper correction. Okay, so the market actually might be like that. We'll go to value area low, we will break that, go to value area low, break the value area high, make a retest on it. Maybe it's not like necessary, but sometimes it happens, and then we go high. So these are all opportunities. For example, you might you might take a trade here. You don't analyze the news, your fundamental is weak. Yes, you might take a trade here, you might have stopped out, and then you take a trade here, you break the value area high, you make a retest, another trade here, you go and take profit after we break this high. These are just the most simplified versions that you can get. Okay, it's not like easy for every scenario on the market. It's not going to be like that. For example, for this one, the value area high is on the highest price of the market, so it's much different than this one. Okay, because we close above the entire value area. As you can see here, this is your area, you close above it. It's obviously bullish. You don't even need to know that much information. It's so bullish. You close above the value area, so the market makes a correction and come to that area. There's a high chance they reject from there. Okay, and I'm going to remind you guys again, these are based on volumes, not based on movement. Market doesn't care about movement. Look at here, we are bullish and the value area is on the top of the market, as you can see. So when you see this chart, you might guess that, okay, maybe the value area is around here, but it's not actually like that. It's up here. So the more we got up, the more volumes were getting executed on this area. So for this instance, and we also closed a little bit late and sooner, and we also had bank holiday on the next day. So maybe whoever was executing volumes here, they were closing their trades, maybe. Okay, so you can know things like that with level 2 data. And there are more things that I can tell about value if I remember. Yeah, the 68% is not like, it's a common thing. People usually put it on 68%. I personally put the percentage on 68. You can change it. It works the best for me, 68% in my experience. But you can put it on 70%. I suggest you that don't put it on higher than 75 or don't put it on lower than 65%. But the best number that I could just, be comfortable with it in these years that I'm trading is 68%. And I suggest you guys to put it on a 68% because it's more accurate. Yeah. So that was the simplest way that I could explain it. So in this day, when you see the value areas up there, there's two chances here. One, we make a retest here. As you can see, we did a tiny rejection here, and we go make a new high. Or since it's on the upper side, usually if you want to take trades like this, you have to be really bullish. If you're really bullish and the market already had a good correction, okay, there's a high chance that you just reject from this area. But right now, as you can see, the value areas are on the high side, and also we didn't make a good correction from here to here. And also we have bank holiday with the volume we're gonna drop. So I suggest you to not trade on bank holiday, but we are just making examples here. The market closed below value area, okay, on this candle, value area low. This is the value area low. And we need a correction, okay? So there's a sell opportunity here. If you can sell here once you see the closure, and put your stop loss somewhere around here. So because you don't need to go back in the value area. If you go back, this is bad. You can also put it like around here. Yeah. Or you can just put a stop loss a little bit higher. If you make a candle, bullish candle inside the value area and it closes inside like this, you can put you move your stop loss here, just in case if it goes higher, you want to get out of this trade because it shouldn't close back inside. So yeah, as you can see, you had a sell opportunity here, and also we had some areas here, the value area for Wednesday. I'm going to show you guys later on the futures chart now, because you guys know how value area works. So, and also you're familiar with the lines and the boxes, so I can explain it more over there. Yeah, that's why we had a tiny rejection here. I'm going to explain it later. And I'm going to remind you guys one more thing here. Value area is not the only area based on volume that we're going to make trades on it, because it's not that simple. As I said, we have more areas like point of control, weekly value areas. It's not just dailies. We have VWAP. We have so many other things that we can use and combine them together. So let me explain weekly, and then we're gonna go on futures chart. So the week starts here and ends here on Friday. Okay, this is the entire week. You can also make a value area for that. If I want to make it based on futures chart, it's gonna be something like that. Yeah, something like that. So obviously the wick is really bullish because we were filling so many orders down here on this range, and then the market breaks the value area and comes higher and then closes above that. It means that probably the next week, if the fundamental news helps and it doesn't shift the trend to the downside, we are likely to push higher and make a new weekly candle which is bullish, make higher highs and all-time highs, new all-time highs on S&P 500. So as you can see, you can extract so much good information that level 1 data is not going to give it to you. That's why you need to use level 2 data if you're a trader. Okay, let me clean these lines and let's go to futures chart. Okay, so you see this orange line here? This is the value area high and this is the value area low that I told you about. Obviously market got close below that and came down here, and you can't see that here because the market is closed on futures market. Oh, one more thing, we also can make a value area for only a session. For example, for New York session or London session is separate value area. As I said, it's not like that you should put it on daily value area. Okay, so now you know that these lines, the blue and the orange ones, are value areas. Okay, and this navy blue is weekly value area that I told you about. So the market actually came down to the Wednesday value area, and we had also had point of control here, and we had a tiny rejection. If I show you on CFD, it was here. We also had a tiny rejection. You see, the market, if I want to be accurate, it's something like this. The area should be something like that. We had a tiny rejection on that. It's here. Okay, so let's go to previous days and see if we had more opportunities. For example, in this area we had a value area low. The market came here, touched it, closed above it, and then it pushed higher. You could either after the rejection, you could either buy right here, put your stop loss down here, or wait for a bullish candle to close like that and put your stop loss below that candle and move with market to the upside. But this one is tricky because we had ADP on that day and it was minus 33,000 jobs on private sector, which is not good. We also had Doge plan for government. They are firing unnecessary jobs on Trump government, and so the expectation for NFP should be weaker, and you shouldn't look for buys on that day. You should even look for sells. But the market went high and the NFP was really good and it was really unexpected. That's why you see on this day the delta is negative. It means that we had more sells than buy. Even though we had more sells, the market pushed higher. So if you're trading based on fundamentals, not technical, you shouldn't take trades here, even if you have good reactions down here, because it might just come back and go down. So let's go for this day. For this day, we have value area here. It's value area low, and as you can see, every time the market touches that, come below that, it rejects, closes above. Again we come back here, rejects, close above. So that's why value areas are really powerful. And then we have value area high here. You can see market had one injection here, another one here, another one here, and we finally break that. So let's go a little bit. Yeah, in this area we had a value area high. Let me decrease the size. We had a value area high here, almost here, and market on that day closed below value area, but on the next day we came above it, and when the NYC opens, the market touches that, rejects the usual pattern, as you can see, and then we make a new high. We closed below the high, but we had a rejection. You could make a really good profit on that. Now, this is one of those examples that I told you that it's not like that every time it's gonna be a reaction to that. And yeah, as you can see, there's a value area high here. We have a point of control here, this pink line. The market comes down, breaks the value area really aggressively, even in lower time frames. If you watch that, it's probably something in news came out probably. I don't remember that day, but so many things are going on recently, from tariffs to war. So yeah, it's these. The more we go back, the volatility of S&P 500 is, or an every chart, not just S&P, is really high because of these news. So we came down. We even came down lower than the point of control. But if you look at the lower time frames and order flow, I talked about order flow on the channel. You see the volumes. After we come above that point of control, if you have a retest on lower time frames, you could enter a buy, but you have to move your stop loss to break even once you reach to value area high. But as you can see, we break that easily and go higher, so there's no worries about here. If we go a little bit further, yeah, okay. On this area, the value area high and low are really close together. Usually when something like that happens, the market doesn't, it's not gonna have a good reaction to value areas. But we closed above it. We had a tiny retest on the candle. If I want to show you guys, I have to zoom. So we closed above the line, and we tried to make a retest on this lower wick of this bullish candle, and the market came up. So these are just all opportunities for trades. If you're like a day trader with like wider stop losses, for example, in this case, when you close above that, you can either wait for a retest to value area or just enter on the candle closure and put your stop loss like down here on the daily low. Or if you want to be even more safe, like a swing trade, you can put it down here, or maybe below value area low. But we might have like wicks down here and then reject close above, so that's why you should have a decent distance from the value area. So you could just, I'll say it again, for example, if you're a day trader or a swing trader with bigger stop losses, not the scalp traders, you can enter here or wait for a retest here and put your stop loss either below the current day low or below, down all the way down here, or maybe if you want to be risking more a little bit, it's a little bit dangerous, but below value area low, because if the market comes back, break the value area high, also breaks the value area low, this is not a good trade to be in it for buys. We can go a little bit further down. Yeah, so in this area, this is your value area high, this is your value area low. Market opened, we went above it, and we closed back inside. Okay, so you could take a sell here, but I'm not suggesting that, because the market is really bullish. You should be waiting for buys. You can after we break that, you can enter a buy, but the stop loss is huge. You should put it below value area low. So your entry is here, your stop loss is here. It's only good for swing traders. You could make a good money if you were a swing trader, because the market pushed really, really higher. Yeah, but if you want to take a buy here, you shouldn't just put your stop loss below value area high. You should put it at least below value area low with a decent distance. So yeah, this would be your stop loss. It's huge, but also the rewards are not bad because the market moved really high. There is a way to lower your stop loss much lower, but which I use this way. and it's the combination of volume profile and also order flow. So it's not just, it's not like a swing trade. You could put it like 7-8 pip stop loss and take the trade. But as I said, if you want to do that, you have to lower your use the order flow for that. So the market actually touched VWAP here. As I said, sometimes we might get inside the value area. This is value area high, this is value area low. We came inside, we touched the average VWAP here for daily, and we had a good rejection. We just tapped it and got rejection up to the side. If we go lower, for example, this one, these are the value areas, and these are after the ceasefire between Iran and Israel, so the market was really bullish. Once the market just opened, we had a really strong closure like that. And yeah, it's almost impossible to take this trade, but only swing traders can take that trade. And since the fundamental is really bullish and we had a really strong closure, you could enter buys when the hourly closes here and put your stop loss below value area high, value area, and also point of control with a good decent space like that. But it's really risky, because if you want to be safe, your stop loss should be below value area low here, which is way too huge. But if you are intraday trader and want to hold your trade for like 2 weeks, 3 weeks, or even more, yes, you can put a huge stop loss like that. But if you want to be more aggressive, you can put it like down below here. But in some cases, you get it stopped out and you have to do a re-entry once the market just might, like, for example, like if you put a stop loss here, the market comes down here, stop you out. But when it goes up here and makes another closure above here, you can re-enter and put your stop loss below this low. You can also do that. Most of these trades that I'm talking about are for intraday traders, swing traders, and day traders that they have like bigger stop losses with a better win rate. But as I said, you can use order flow to decrease your stop loss much higher than that. And let's come here. Okay, on these days we had war news, so the market fundamental and the fundamentals for market was bearish, and also market was bearish. So if you're in this area of chart, you should be looking for sells. For example, on this day, we had a previous day value area. Oh, by the way, we use value area of the previous day, not the current day, okay? Because the current day is constantly moving, because market is calculating every volume. And for example, when the market comes up, you have new volumes up here, the value area high and low might move a little bit higher. So we're using the previous day. So on previous day, we had this value area high and value area low here. The market, as I said, we are looking for sells. Market opened here. We came up to make a correction. You could enter a sell down here on value area low, but if you're using that, as I said, you have a this, you should put your stop loss above value area high with a good decent distance. Or at this point, you should just put it on this high. I mean, what's the point? It's just a few pips more, okay? Just to be safer. And if you took this sell, you could also enter another sell here. As you can see, we retested the value area high, we had a rejection. Also, we did another retest with this candle, and we rejected again. If I wanna, let me zoom more so you can see what exactly is happening here. See, we had a retest here and then another one with this candle. We came down, we had some support here. Market was struggling, but then we broke it on the next day. So on the next day, we just dropped instantly, but we had the closure here, but it's not a strong closure. We had rejection. Then we had a bullish candle. Then we had another strong closure. Okay, now you could just enter a sell here, put your stop loss, as I said, if you want to be safe, above value area high with this good distance, or which is a lot in this case, or If you want to be risking more, be more aggressive, with a good distance above value area low. So your entry was here, your stop loss was here, or above value area high. And the day closed like that. The next day, let me check the next day. This is value area low, this is value area high. We opened with a gap and we closed above value area high. I think in this day we had some news that America will not involve in the war, but exactly on the next day here, US bombed nuclear facilities in Iran, and we closed the market with a huge gap. So the market closed above it. We had a retest, as you can see, on value area high, and we went up. So now why market rejects here? Okay. Why market rejects here? Let me clean that line. We went up here and we touched the value area here. We touched the value area here on the day before yesterday, okay? And this day we had a value area, we came up, we basically had a correction for this leg down here, okay? So we touched that and the market rejected really good with that. We also broke this low, and you could make a really huge profit here. You can enter a trade here and put your stop loss right above that. It's a really tiny stop loss, and the profit was huge. The risk reward was a lot, even for day traders or swing traders. So after the bombs, US just said that they're not gonna, they retreated their troops and they're not gonna attack again, and they're done. And also they made a ceasefire. Iran and Israel made a ceasefire, so the market went to being greedy and risk on. The stocks were growing really fast. So after the war news and ceasefire, I think it was around this candles in this area. I'm not sure exactly the clock, but we had a value area low here and a value area high here. So what are the opportunities here? We touched the value area low, we came way down, then we had a really good rejection here. Okay, we closed here. So here is your buy chance. Also, we had a retest on the next candle. So if you would enter a trade here, you could put your either on retest or on closure. Let's just say on closure, you could put your stop loss below this low. And if you would hold it, it would be a nice, profitable trade. So yeah, these are all the examples that I could tell you guys on this trade. Obviously, it's much more complicated than that, okay? And I was just using value areas. You should consider other areas, weekly VWAP, daily VWAPs, everything. Deltas, everything, cycles. There are so many things that you need to be careful about it. And this is just value area. I will upload much more videos later about value area and value profile and other things on the chart. So make sure to subscribe and not miss those beautiful videos, which is really useful for you if you're using level 2 data. See you on the next video.